Hello, my name is Siringoringo. I'm an attorney, and I am the founder of the Siringoringo law firm. My law firm helps people. We provide services in the areas of bankruptcy, criminal defense, civil litigation, family law, immigration, and estate planning. But perhaps what we're most well known for is our practice in real estate law. The reason being, we have obtained successful loan modifications for many people living throughout California. Now, what is loan modification? A loan modification is agreement with you, the homeowner, and the bank or the lender to change the original terms of what your loan already currently is. Now, why would you need a loan modification? The bottom line is you can't keep paying the payments for your loan, and that's why you need to change it, or else you won't be able to live in your current home. And that's what I want to talk to you about today. I want to talk about the secrets to renegotiating your mortgage. The first thing, we got to talk about a little bit about a history of loan mods. Up until a few years ago, the term loan modification didn't exist. The first attempt to create loan modifications was under President George Bush, Hope for Homeowners. That program wasn't successful. Only a few hundred were able to obtain a modification because of different reasons. Then under President Obama, he made the Making Home Affordable program, or HAMP, Home Affordable Modification Program. Right now, as of today, there have been about 1 million successful modifications under the HAMP program. But when it was created, it was intended to help 4 to 5 million Americans obtain modifications. As of January 2012, the federal government announced that they're tweaking the Home Affordable Modification Program so that way they give bigger incentives to the lenders to help give principal reduction and lower interest payments and mortgage payments, and to extend the repayment period to help homeowners. So loan modifications have been around probably the last 5-6 years to help you, the homeowner. Now, the first thing to help you obtain a loan modification is you have to establish a hardship. What does that mean? That means you have to be able to document and explain to the banks why you're not able to make your current monthly payments. And with these economic times, it's really easy to explain. One, you lost a job, and you finally got another job, which is not paying you as much. 2, your hours were taken away. Or 3, you had overtime, but now your overtime has been cut. And everyone knows we're going through hard times. You have to be able to document it and explain to them in a letter with backup, showing your previous year's taxes or even paycheck stubs that you have an economic hardship, but that you still have enough funds to be able to make a payment if a loan modification is obtained. So you have to be able to establish your hardship, a legitimate hardship. After that, the second thing you have to be able to show is you have to be able to submit a complete and favorable financial picture of yourselves to the bank. Now, under the HAMP program, a mortgage payment for a favorable loan modification is usually obtained by calculating what 31% of your monthly gross income is. That means your monthly income, your gross income is your money before taxes. If you calculate that and multiply that by 0.31, you'll have 31% of your gross month income. That is a figure that the banks would allow to give you a modification. If your payment level right now is lower than 31%, then you don't qualify under the HAMP program. And here's the thing, the banks are in business to make money. Of course, they want to help you, but their first priority is to make money. And so with this favorable financial submission, you have to show, one, it's in the bank's favor for them to modify a loan, because they will make more money that way than for the bank to foreclose on you and your home. The reason being, there's a lot of cost on the bank's end to do a foreclosure on a home. They have to file notice of default, notice of trustee sale. They have attorney's fees. And once they do sell a home, they have to do an eviction. They have to rehab the property, clean up the property, do some upgrades, and then they have to hire a broker or a real estate agent to sell it. Those are all costs that the bank is losing money on. So we have to make sure, and you have to make sure, that you're able to submit a complete and favorable financial picture to the banks to say, hey banks, look, you have the formulas already. It is way favorable for you to give us loan modification than for you to go through foreclosure. And the key of this one is there's a lot of little technicalities that might disqualify you from obtaining a loan modification. Sometimes people don't have the income to make favorable new payments, but they don't take into consideration other incomes they might get, like such as Social Security, or if their children are helping them, or if they're renting a room, or if they have a settlement from a case and they're getting paid monthly on it. There are so many different factors that will be able to help you or hurt you, and it's all about the knowledge that you have to see what the banks are looking at. Now, the third thing that you have to be aware of in trying to obtain your favorable loan modification is you have to follow up. You have to negotiate with the bank. The reason being, all these banks have loss mitigation departments, which is the department that is dealing with you. And as you know, if you've tried to do loan modification by yourself, you tried calling the bank and it's always a different person. Sometimes you're on hold for 30 minutes, 45 minutes, even an hour. I've worked on a loan modification for a client, and me as an attorney, I have been put on hold for 1 hour and a half before. And you, as a hardworking American, trying to work hard, earn money to feed your family and pay for your home, you don't have time to do this. But it's really necessary. Every time you call the bank, you should keep a log of what they said and what you said to them. Because many times the banks would try to delay the loan modification process by telling you, oh, last conversation, we said we needed these 2 documents, or we emailed you this, requesting more additional documentation, or, oh, we wrote you a letter concerning documentation we needed. So every time you follow up, you need to keep the banks honest by keeping very accurate and detailed notation. And those are the 3 very important secrets to obtaining a loan modification. And this is the bottom line, ladies and gentlemen. Many people, I would say at least 80% of the clients who've come to the Siringoringo law firm to help get loan modifications have tried by themselves. They are intelligent people. They are other attorneys. They are brokers. They are professionals. They are CPAs. They've applied for loan modifications and been denied. They went to other brokers to help them. They've been denied. They went to other attorneys. They have been denied. The reason being is the people that they ask to help them don't understand the full picture of what the banks are looking for. I used to work for a national litigation law firm whose clients included Bank of America, Citibank, Wells Fargo, Deutsche Bank. They were a Freddie Mac designated and Fannie Mae retained law firm. So I know exactly what the banks are looking for. And many of my staff used to be brokers and mortgage underwriters. And as a matter of fact, I've had many people on my staff who used to work in the loss mitigation departments of the different banks. So we know exactly what the banks are looking for, and we are familiar with the software and the formulas that are working, and we have a high success rate of helping people get loan modifications. If you've tried by yourself, if you've gotten help and you weren't able to get a loan modification, come to us. We are here to help you. The Siringoringo law firm prides itself in helping people and being completely honest. When you come to us, you will get a free consultation with a professional who will help you analyze your financials and your situation and let you know, 1, whether we can help you, or 2, not. And if we can't help you for loan modification, we'll explain to you other options that you can get. Now, the truth of the matter is, people ask me all the time, Stephen, can we apply for a loan modification by ourselves? And the answer is yes. But here's the bottom line. It's like this. I explain to people sometimes when you file your taxes, can you file your income taxes yearly by yourself? Of course you can. But wouldn't you feel more comfortable going to a professional, a tax expert or CPA who can help you with all the tax deductions and the write-offs so you can get a tax refund? And that's the same situation here with loan modifications. Like I said, other brokers, other professionals, other attorneys, even bank managers have come to my law firm unable to obtain a loan modification by themselves, but we were able to help them. I would suggest for you to actually try to do a loan mod by yourself so you can know the difficulties of what it is. But if you are serious about saving your home and helping your family, I encourage you to call us right now. Call the number right here so we can make an appointment with you and sit down for a free consultation to be able to help you. And when you come, don't bring your checkbook, don't bring no credit cards, don't bring no cash. We won't take any money up front until we do our services to make sure that we can help you. Thank you very much. I hope you found this informative, and I appreciate you taking the time to watch this video. Thank you, and have a great day.